Next, I would like to provide a brief overview of the Africa Investment Index that was created by Quantum Global Research Lab. According to that organization, the Africa Investment Index, quote, seeks to provide a snapshot of the investment climate in the 54 countries in Africa and give a ranking of these countries according to their attractiveness, end quote. As shown in this graphic, the index draws on 6 investment criteria, which include economic growth factors, liquidity factors, risk factors, business environment factors, demographic factors, and social capital factors. In the next few minutes, I will provide a very quick overview of each of these factors, including the countries that were ranked highest for each of them. I should point out, however, that the country ranking pertains to 2018 data, which was the latest available Africa Investment Index from Quantum Global that I managed to find. In other words, some of the countries may very well have slipped in the rankings between 2018 and the present. Let us begin with the economic growth factors, which generally include such data points as levels of domestic investment as a percentage of GDP, overall GDP growth, as well as the size of the economy. Based on these indicators, the countries topping the list in the 2018 ranking included Ethiopia, Algeria, Mozambique, Tanzania, and Côte d'Ivoire, or Ivory Coast. According to the report, Ethiopia secured the top rank based on its average GDP growth rate of 8.4%, sustained over the 3 consecutive years leading up to the 2018 index, and, quote, fueled by substantial public infrastructure investments and reforms that strengthened the country's growth foundations, end quote. Now, as I previously mentioned, however, these rankings should not necessarily be taken at face value for 2022. In fact, it is very conceivable that the subsequent political tensions and security concerns over the Tigray region in Ethiopia may well have adversely impacted the country's near-term growth prospects. The second factor used in the Africa Investment Index relates to liquidity, which according to the report includes the level of domestic real interest rates and excess money supply. The rationale for these indicators is rather straightforward. High domestic interest rates tend to adversely affect levels of investments in real market sectors, whereas excess money supply may well stimulate future economic growth. And so on these indicators, South Sudan came out on top in the 2018 ranking, which might also be surprising considering what you might know about developments in that country over the years. The reason for Sudan's high ranking may at least in part be due to its resource export-based economy. High oil prices will lead to an influx of petrodollars, which fuels liquidity. However, as we have previously learned in the discussion of economic growth and development, countries that are too dependent on oil and/or other natural resources are inherently vulnerable to commodity price fluctuations and consequently may experience significant volatility in their economic fortunes. When it comes to emerging and frontier markets, we have previously discussed a broad range of risk factors, including political, economic, social, technological, environmental, and legal risks. Quantum Global operationalizes its risk factor by focusing exclusively on economic and financial risks, such as sovereign credit ratings, currency depreciation risk, current account balance, and external debt levels. Based on these indicators, the sovereign African economy of Botswana came out on top. And if you recall, I have made a passing reference to Botswana during the economic growth and development discussion. In fact, though landlocked and resource-rich, particularly in diamonds, Botswana has largely escaped the resource curse and the ill effects of Dutch disease on account of good governance and comparatively high levels of transparency and accountability, as well as stable and strong institutions. The inclusion of Nigeria in this ranking, on the other hand, might be somewhat surprising. In its 2018 report, Quantum Global simply noted that, quote, Nigeria's external debt is small, while external reserves cover more than 3 months of imports, end quote. And even assuming that this is still true today, it would appear obvious that this does not capture the full extent of the risks of investing and operating in Nigeria today. Recall, for example, Mark Mobius's account of the extent of corruption and bribery that foreign investors and business people have to contend with in the country. For the operationalization of the business environment factor, Quantum Global draws on the World Bank's doing business indicators, as well as overall openness to trade. And on that ranking, the Seychelles, which I had described in part 1 of this week's lecture as the only African country that is on the list of 80 countries in the world classified as high income. Now, as such, the Seychelles ranking, which is sustained by a relatively high degree of trade openness and a strong score on the World Bank's Doing Business Index, is hardly surprising. In fact, Quantum Global noted that the country's DBI, or Doing Business Indicators Index, has benefited from, quote, recent tax reforms, such as reduced business taxes for a certain revenue threshold and the introduction of new measures for enforcing contracts, end quote. And if you take a look at the map, it is also worth noting that apart from the island nation states of the Seychelles and Mauritius, the African economies that perform best on the business environment factor are all located in southern Africa, Botswana, Lesotho, and Namibia, which could prompt the question of whether or not there might in fact be specific geographic factors that might play a role. Now, to be sure, I am not suggesting that this is the case, but the simple fact that of all the continental economies that are ranked highest on business environment factors, all of them are located in southern Africa should nonetheless be rather intriguing. The demographic factors, I don't think, need much more elaboration, as we have already referred to demographic dividends and youth bulges in numerous previous discussions. Simply put, the demographic factor here refers to the size of the population and, by association, the present and future market potential. And on that basis, Nigeria is clearly coming out on top, as it is the most populous African country with a population of approximately 220 million people as of June 2021, according to the CIA World Factbook. And finally, there is the social capital factor, which Quantum Global operationalizes by looking at the Facebook penetration rate in African countries. On that measure, as shown here, Tunisia comes out on top, and as noted in the Quantum Global report, quote, Facebook is extremely popular in Tunisia with 3.4 million Tunisians using the platform out of a total population of 11.4 million people, end quote. And if we take a look back at the beginning of the 2010s, Tunisia's rank at the top of the social capital factor is no less surprising, considering that social media platforms, including Facebook, but perhaps more importantly, Twitter, were the catalyst behind the Arab Spring revolution that started in Tunisia and which I had previously referred to in the Week 4 discussion on the Middle East and Northern Africa.